Hi everyone, thanks for tuning in. This is CryptoVatsik. If you enjoy this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel for future updates. Nothing of what you're about to see is considered financial advice, and they're just my opinions. Let's go. Okay, today we're going to cover technical analysis on Sandbox, and the first thing we're going to do is flip to the logarithmic chart. And so from a high time frame perspective, we can mark out those key levels that are going to be really important to understand no matter the direction and price through the rest of the bear market and into the next cycle. So we'll just make our way down. The first level is going to be right here around $2.70. And this formed our initial support for quite some time as we started to distribute down and begin this bear cycle. The next area is going to be right here around just under $1, because this formed an area of significant resistance before we made all-time highs, and then it was where we found our next major support after this dump. Our next level is going to be pretty much just derived from our current level of support over here, but we do have some confluence with this level from previous price history. But ultimately my bearish case scenario level is going to be right down here, right around 35 cents and change. If we just go back to our previous major correction in 2021, you'll notice that we had almost 3 equal pushes down right here, which was very nice, all the while with a beautiful breakout of this range right here. Okay, so this correction is different than what we are currently seeing, but it is just really important to go back and look at the data that we've got. And you'll notice again, those 3 almost equal pushes down. They usually go in 3s, and then we had a very nice breakout of this overall channel, downward sloping channel, which led to this bullish accumulation above these key levels, which led to our all-time high. And like I said, what we're currently seeing is definitely different, but I think it's good to go back and start to look at what bottoms could look like and how they could form. Now moving over to closer towards what we're seeing now, we do have this downward descending channel here. Okay, with lots of interaction up here, multiple times here as well, and then currently our most recent tap at the top right here back in November with a couple taps of the bottom in here. Meanwhile, lots of respect of that EQ level as we move further down. Okay. And typically something I like to do is I like to mark out the quarters of these ranges. Okay, so if this here is the upper band, otherwise 100%, this is 0%, so to speak, with this middle equilibrium being 50%, then I like to mark out the quarter of that right here. Okay, and so basically these are the 2 quarters, and otherwise the other quarters would be down here and down here, right? So if you can see that, okay. But we will focus on the upper 2 quarters, upper 50th percentile right now, because that's where we've mostly been trading currently, as we see. Again, you'll notice as we start to zoom in further and go from a little bit high time frame to a little bit lower time frame, we're still on the daily here on high time frame, but you'll notice that there's lots of interaction here as resistance with this EQ, this quarter EQ, resistance again here. Okay, briefly broke above it. And then, however, back down to the 50th percentile over the overall range, and then a couple of taps, and then came up right into that quarter range as resistance. So currently, from a range perspective, if you're using simply just ranges, and I know this is getting busy now, so we'll just stick to the ranges, and then I'll get rid of them, and then I'll show you another way of looking at it. But currently, we have our level of support, macro support right here, okay, around just over 50 cents, and we're pinched between this quarter EQ range here as resistance, right? So if you're trading this in the short term bullishly, you want to see this level of support hold, with this low possibly holding would be ideal. However, if we come back down and chop a bit more, you want to see a retest of that, perhaps some sort of double bottom kind of thing, and then a breakout of the EQ here on this quarter range, and then probably target somewhere up here around the upper band of the overall macro downward sloping range. And the vice versa, if we were to lose this level with a bearish retest, probably targeting somewhere around here, is my take around the overall EQ of this range if we drop further. But from a macro standpoint, like I said, I marked out those key levels here, right? So basically I want to see those levels being held. If you're looking to the downside, if we start to dip Below this, we could chop some more within this range, potentially down to this next level of support down here, this macro level. Okay, so there's lots of interaction here, confluence with these levels in here until we broke it with a nice bullish retest right there. Okay, so that's my next level if we start to push further down. If we don't and we start to push up, then I'd be looking at this level up here, okay, for basically this swing high until we broke down, had the FTX collapse. That is a level that I would really like to see us reclaim. Meanwhile, a breakout of this upper band of this range. So basically what I mean by that is if we break out to the upper 50th percentile, okay, what I mean by that, this quarter right here, into there first, that's the first criteria, and then a break of this band, upper band, okay, and then start testing this high and start testing this macro key level here, because I think if we are able to get above that, then it's an extremely bullish case scenario, and there's a reason to believe that the bottom is potentially in. But I think the more realistic scenario, the more likely scenario is basically simply some more chop, faking you out, within this range kind of thing, and then ultimately maybe a breakout over here with like little volume, little reaction. But then that just means that we start to get our area of accumulation, which is also a potential bottom, right? That's something that we could see as well, potentially, that I think is probably the more likely scenario. I also have a pretty key level here as well. Okay, so from this low, this low back in June that we had, okay, that was a key SR level. Just make it red for now. That was a key SR level that we lost, okay? And so you can just see why here. So basically we made our low in June. We came up, we had a nice push, we had distribution rounding off, and then market structure break from these higher lows, higher lows, higher lows, and then lower low, market structure break, ultimately just coming down, and then basically bounced right off of it again, a couple deviations below with these wicks. And then when it was lost, we had a bearish back test or bearish underside retest right there. Okay, so this is that key SR level that I want to see us basically flip in the mid to short term, but I just don't think it'll happen right away. But this is going to be the key level in the future that I think will be very powerful once we can reclaim it. Okay, so now the chart's getting pretty busy, so let's look at it a different way here for now. Okay, so first things first, we had our area of bearish consolidation right in here. Make it red. Right in here, okay, that led to this drop down, and then basically what we got after that is just our area of essentially distribution or redistribution. See, this is essentially just areas you really want to be watching as potential resistance on the way up, okay? And so basically with these highs, these are kind of your targets, so to speak, if we do get a bullish push to the upside. Another way of thinking of it is that that's where the supply lives, right? Basically, you got your demand down below and then your supply up above. People are underwater, either waiting to, dump their bags at a break-even level at market, or there are people or traders looking to short these areas, okay, as we come in and sweep that liquidity up there. So let's start to get into what we're seeing now. Let's drop down to the 4 hour, really drill into the low time frame stuff here. Okay, so first off, we got our area of demand down here that's been tested multiple times. Okay. Lots of tests here at wick, okay, some consolidation here, back inside, and then nice test again here with some good reaction so far. So that's currently our demand zone. Now, basically, we have this origin of the breakdown from this level right here. Okay, so basically what happened was we had this bearish consolidation in here. Okay, we broke down from that level. We made a new low in comparison to this low. So I want to see a reclaim of that level first. And then possibly confluence with that area would be this triangle that I'm seeing right here. So if we did see a reclaim of that breakdown level right here, and then also a breakout of this triangle, something like what Bitcoin and Ethereum are doing currently. There's a triangle I drew and shared on my Twitter just like this last night, and I said, I was anticipating a break to the upside, and we've got it, but sand has more room to move and play within this area. Okay, so if we do see a breakout there, similar to that, I think that would also be a reclaim of the monthly open. Where's the monthly open? December 1st. Yeah, so here's the monthly open right here. So basically, right, that line that I drew right here, this guy, okay, that's our monthly open right there. So a reclaim of the monthly open would be a good position in my opinion. Now, this isn't the most clean market structure break ever, but we do have a market structure break currently. Okay, so basically we had a lower high, now we've got a higher high, so there's a market structure break. So, if you're playing in the short term, maybe a deviation below, maybe back into demand. This isn't a very clean setup, in my opinion. There are cleaner market structure breaks, but technically we do have a higher high now. We do have the retest right here. So maybe some more consolidation around this level, confluence with this low back here. Okay, and then we start to push up to the monthly open, and then again, carefully watching this breakdown level right here. So if we start to fail and start to get a swing failure pattern or lose momentum, and then any sort of market structure break to the downside is basically a short looking back down to at least this level, and then potentially actually just back down to demand. And you'll notice just quickly with RSI, we had a bullish divergence. So we had a low, we had a lower low. Okay, there's our low, there's our lower low, there's our low in RSI, and then there's our higher low in RSI. So we printed a bullish divergence with a very nice reaction to the upside back into this level around 50 right here, this mid range right there on the RSI relative strength index. So nice bullish divergence so far with a good reaction. So again, maybe we start to see RSI taper off a little bit more. Okay, before pushing further up, which would ultimately mean another opportunity to get long closer down here to that market structure break level, ultimately with your risk being below and then your stop loss being below this low, and then targeting obviously, so up here, that origin of breakdown, and then possibly a sweep of these highs, something like that. And then it just depends if this outer triangle, this macro triangle is going to hold, if it breaks that or not, especially if we want to see this origin of the breakdown right here, this level hold as well. Now, just coming back to the daily quickly, I want to point out the last time we had a major reclaim of a significant macro level was back here in June. Okay, so we had our low, we lost it, we came back down, not quite a deviation because we traded under here for multiple days. Okay, so this is definitely a loss of that area with a bearish retest right there. However, we smashed up. Okay, we came into supply, rejected, but then had a beautiful retest of this level, which is a reclaim of that key level. Okay, so that the last time we saw that, we therefore, after that reclaim, we saw a nice push up, 50-ish%. Okay, so keep it in mind, we're on the log chart here, so it doesn't look like much, but this is a significant move. This is a significant bear market rally. So if we do get back above these key levels here, okay, so currently from this low right here, that's our SR level. Okay, so we had our multiple tests confirm support at the time until we lost it. We are still trading multiple days below that low. We had a bearish retest here. If we can, do everything that I said on the lower time frame and start to break the downward sloping trend right here, this resistance line, reclaim that low time frame key level right there of the origin of the breakdown, and then start pushing up here, and then reclaim that level, then I would expect a major market rally. Basically, tough to say if it's still a bear market rally or not. We had, just in my opinion, we haven't seen that time of accumulation yet. But in the short term, I would see, a major push, at least up to these highs at the least, and potentially somewhere up here as well, if we are able to reclaim this level right here. So this level is just under 70 cents. And you can, if you got in down here with your stop loss below demand kind of thing, and you're willing to take on that risk, then you could possibly have like your target 1, target 2, and then possibly target 3 up here. Okay, as kind of a larger swing trade with we do get some sort of rally, but again, my criteria being the lower time frame, watching these levels first to make sure that we get the criteria for this to actually come to fruition. Thank you so much for joining, everyone. I really hope you found this video helpful in some way. If you do enjoy this content, don't forget to subscribe to the channel, and please give the video a like, as I would really appreciate it. The support really helps the channel build, and you can always follow me on Twitter at CryptoVatsik as well for frequent updates. Thanks again. We'll see you in the next one. Peace.